So here's how I was able to collect 2,500 Canadian this week just by selling call options. So I sold some Kraft Heinz options, but I went to May 17, so 2 months out, because the April 18 were too low, and I went for the 35 strike price, so I collected 45 cents per share, so that's $90. And then I did the same thing with Six Flags. I went until May, so 2 months out, at a 55 strike price, since I bought it at 54, and I collected $105. United States Steel, I went with April 18 at a 22 strike price because I bought the stock at 21.8, and I collected $25, so much lower than the previous months. So Kraft Heinz represents about 1.2% in 2 months, so really not good. So annually, that's about 7.5%. Usually my goal is to make 3% per month, but I had no choice with this bad stock. With Six Flags, that represents 2% in 2 months as well, so 11% in a year. With United States Steel, that represents 1.1% in 1 month, which is 13% in a year. And then I sold Macy's as well, collected $20, which represents 0.7% in 1 month, or 9% in a year. I've got Bristol Myers that I sold at April 18 expiry, 50 strike price, collected $199. So that's almost 4% in 1 month, or 47% in 1 year. I sold some MGN call options at an April 18 expiry date at a $3 strike price. So this one's a little bit risky because my cost on the stock is about 4.11, but the stock dropped all the way down to 2.5. But this is the only strike price that works in terms of acceptable call premiums. So I took the risk to sell call premiums at this strike price. The consequence of that is, if come April 18 the stock is trading above $3, then my shares could get sold or will get sold at $3, but my cost is 4.11, so I'm going to lose $1.11 per share. So that's a risk I am willing to take with this stock, because otherwise there's nothing else I can sell unless I go 4 or 5 months out. So with Teva Pharmaceuticals, I had to go 2 months out, so May 17, to get at least some decent call premiums. Collected $56, and I went with the 19 strike price. The stock cost me $18.50, so I had to go with the strike price that I was comfortable selling the shares at in case they get called away. So with Immunogen, the return is about 2.4% in 1 month. Annualized is 29%. With Teva Pharmaceuticals, the return is 1.5% in 2 months. So annualized, it's 9%. And then I also bought another pharma company, which is something I didn't want to do because I've seen what happened last month. But I mean, last month I bought 4 pharmaceutical companies. 2 of them went very well and 2 of them dropped 50%. But I decided to take the risk again this month with this company here, ALDX. I bought the stock at $8.25, and I sold call options at 7.5 strike price. So a strike price that's below my purchase price, but the call premiums were high enough to cover for the difference and a bit more. But I did this in order to give myself downside protection in case the stock falls. So this would be about an 18% return in 1 month if the stock stays above 7.5 come April 18, and annualized, that's 216%. I also bought Micron shares, bought it at 39.75, and I sold the 39 strike price at an April 18 expiry, collecting $268. And I went with the strike price lower than the purchase price because I felt like Micron was probably going to go a little bit lower, although right now it's trading in the 40s, but that was just my feeling. Regardless, it's still profitable. So that's a 5.2% in 1 month, and annualized, that's 62%. I also sold the Giuseppe Key Energy 1 month out at April 18 at a $3 strike price. I collected 23 cents per contract, 11 contracts. So that's $253. So if my shares get called away, that's going to be a return of 16%, because I'm going to combine the 23 cents that I'm going to collect, but also my shares will get sold at $3, and I bought the stock at 2.8. So that's if the stock is trading above $3 come April 18. I'm going to make 16% in 1 month, and annualized, that's 200%. I also bought ACB, Aurora Cannabis Inc. So I'm really against wheat stocks. It's not something I wanted to invest in or buy because I don't like the product or believe in it. But since I'm not really investing in it right now, it's mostly a trade, it's mostly a transaction. So I'm just taking advantage of the movements of the stock. So I bought it at $10 today and I sold the 10 strike price and collected 85 cents per contract. So that's 85 cents per share. So that's $170. So 1 month out, that's a 9% return just from the call premiums. Annualized, that's 108%. So I saw that Aurora Cannabis had earnings coming out in May. So I made sure to stay away from a May expiry date because of earnings. Usually with earnings, there's always a lot of movement. So with writing covered calls or selling call options, you want to avoid earnings. So that's a lesson I'm learning as I'm going through this strategy. So I also sold Vodafone call options. I collected $38, but I went all the way out to December 20th at a 22 strike price because my cost is 22. And I don't mind keeping the stock all this time because it pays dividends. So I just wanted to get something out of it, although it's completely insignificant. Did the same thing with Ford all the way out to June 21st at a 9 strike price. My cost is about $9, but I just wanted to collect call premiums out of the stock because it hasn't been moving for a very long time. And at least I'll be collecting dividends while I'm holding on to this stock. I don't see it going to $10 before June anyways. So I had L brand from last month, so I sold some more this week, some more call options this week at a 26.5 strike price, and I collected $125. So that's 4.7% return in 1 month. It could actually be more if my shares get called away because I bought the stock lower than 26.5. So just looking at the call premiums, that's 4.7% in 1 month. Annualized, that's 57%. Now, since I bought the stock at 26.2, if we take into consideration the difference between the strike price and the purchase price, that's a monthly return of 6.2%. Annualized, that's 74%. So these are the trades I made this week and all the call premiums I collected. And as you can see, they total up to about 2,500 Canadian. Now I still have a stock that I haven't sold call options against, which is Novavax. I've got 3,200 shares, but because the stock dropped more than 50%, all the way down to 55 cents, I'm unable to find the right call option to sell. So I'm still looking for the right call option to sell. I think I'll have to go out maybe 4 months out just to collect even 5 cents or 10 cents, which is better than nothing, but obviously not what I was planning to do when I bought this stock in the first place. So I have a lot of videos on covered calls. If this is the first video you watch, I'll link them up in the description below so you can watch the rest of my videos explaining how to write covered calls. And if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. And it is tax season, so if you're looking to do your taxes and you need an accountant, don't hesitate to message me. Link will be provided below. Thanks for watching.